Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition. Having some fun with the graphics. Glad you guys enjoy that one. Thank you, Katie, for the shirt as well. We may have some more shirts available here, but we've still got some stuff to work on. The topic today was driven, again, by listener questions, although we have talked about this over the past few days, but I want to maybe dive a little bit deeper into what are some of the causes. So thank you all for joining us. I see I got some new people here. For those who are new, hit that subscribe button so you are alerted when I do this show every day almost every day. Monday through Friday from 2 to 3 p.m. Pacific time, or 2 to 2:45, somewhere in there. In the next couple weeks, I will be taking some time off as I'm going to be teaching some classes, which are going to run right through the show time, so I'll let you know more about that. That's going to be October, 9th through 13th. I think that whole week will be a no-show week. I know, it's tough, but I got invited back to teach in the classroom, so I'm pretty excited about that, and we'll see how that one goes. It's not bad. It's kind of a cool idea. Might as well have a little bit of publicize myself a little bit. We'll get there. It fits great, and it's a great quality shirt. Anyway, let's get on with it. Here is our graphic for today. It says the buck doesn't stop here, and I was trying to have a superhero. I wanted a superhero with a cape that looked like money, because right now, as we've seen in the chat here, Skilled Stocksman said the U.S. dollar is king. Which currency can knock it over? Right now, nothing. And, it isn't that... As John O'Donnell would say, and this is a very crude remark, I apologize if it offends anybody, but John O'Donnell would say, right now, the U.S. dollar is the prettiest girl at the ugly girl dance. And it's like, wow, John, way to be rude and PC and offend people. But he's right. Right now, even though the economy isn't great, our politics aside, that's always going to be a complete fustercluck. If you look at what's going on with our economy, it's actually picking up steam. The numbers are starting to look better, certainly way better than they were through the pandemic. So what you get is people doing a flight to security. All right, fine. So now they're buying U.S. investments. And if the Japanese want to do that, or the Russians want to do that, the Europeans, they're going to have to convert their currency into dollars to buy our markets, which have been pretty robust. Now, granted, we are rolling over a little bit here. So the question that came through, which I will do so today, Alex says, can you explain what is driving the U.S. dollar higher? Well, it's not one factor. And what I typically like to do, and this is kind of the way I teach as well, is I started the big factors, right? What's the most impactful piece of it? And to me, the most impactful piece there's two. Number one is what I just mentioned, which is we have an economy, we have markets which have been going gangbusters. So money is pouring in, people have to buy dollars, and that pushes that US dollar up even more. I would argue that normally that would be the biggest driver. However, we have a different equation going on right now because we have this bond market, which we've discussed at length here on the show, but this bond market is, I would argue, the best catalyst for the dollar going higher. And that is because we are the prettiest place to go and park your money. Whether you're talking short-term or long-term, we have the best rates in the world. So if you want to buy bonds, whether it's a 3-month or you want to go out there and buy a 30-year, we've got the highest rates around. Now, there might be a couple other countries that are higher, but they probably don't have the security and stability that the United States has. And that there is the problem. Now, we'll focus today on the dollar index. So here's the dollar. It has been absolutely gorgeous since mid-July. I mean, it has been, I believe, 11 weeks in a row. Let's make this a weekly chart. Right? It has been, look at that. There's not one red candle on my screen right now. That's a weekly, which tells you that every week the dollar has moved higher. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 11 weeks, and we're currently on our 11th week of nothing but up. And it all of a sudden feels like it's accelerating because it's breaking through some milestones and some overhead ceilings. So all in all, this looks great. Now, that said, if you look at this weekly, you guys can see that we are coming right back up to this blue line that I have drawn. It's the highest of those three. That blue line, for me, I kind of think it's a little bit misdrawn. Let me move it up. It should be right here, right across those real bodies that you see from the week of November 14th and the week of November 21st. So I'm looking at that as the next logical target, which is 107, right? Well, just right around 107 is where I expect this current dollar trend to stall out, which it very well could do because we are definitely picking up some speed. But it is absolutely beautiful. I mean, this is really the dream of everybody here, is to buy into something where you get a trend that goes up for just 11 weeks straight, and maybe longer, right? I'm not saying that the dollar's trend is up, which is why I created that fun graphic, because it does feel like it's a superhero right now, and it doesn't feel like it's stopping. It actually feels like it's picking up momentum. So to go back to that original question from Alex of what's driving it higher, number one is people are looking for a place to park their money and make more money with it. You know, and I made the comment that, Japan will issue bonds at negative 0.1. They'll issue at 0. Right? They have a negative 0.1 Fed funds rate. So you can get issue bonds at 0.5% over there. Take that money that you made, immediately go and buy U.S. denominated bonds and be earning 5.5%. So huge spread opportunity, which is causing them to want to sell more over there in Japan, sell more bonds, and then take that money and come over and buy more, and you have a free spread of almost 5%, depending on what rate you sell your bonds at. So that's causing a lot of this. To me, that's the biggest driver at this point, is that yield arbitrage, where you're getting more people are looking, saying, I'm going to buy bonds. Again, we've had conversations on this program, and many, Big Ed was saying, go with the 3 month because you get 5.5. Others are thinking, hey, I'll lock it in for, let's go in for 10 years, because the 10-year has been surging as well. Here's the 10-year up today. In the new session, it's got a little red candle, but notice this just big green candle here today. I talked about 4.7 kind of being that next stopping point, and I definitely think we're going to get there. It's strong right now. Why is this a problem? Because the highest, not for best dream for my long equities. Yeah, true, Big Eb, true. Well, I mean, let me take a step back and look at the magnitude of importance. If you're looking at the different factors that are going to be driving a market, up or down, most people are going to look at the market itself. Meaning, if I think the S&P is going to be going up, then I'm going to be focusing on the S&P and looking at trends and demand zones and all that stuff. However, I think I've used this illustration before, and I don't have it ready right now. I wish I could bring it up right now. I want you to imagine you're looking through a steel tube, right? And it's a 1-inch diameter steel tube, and think of that as the stock market. So if you wanted to move that, and it's laying on the table, if you want to move that steel tube, you could just push it back and forth. It's easy to manipulate if it has no other forces impacting it. But then I want you to take that tube, which is a 1-inch diameter, and I want you to put it inside. Let's see if I can do this. I know I shouldn't be doing these things live because it always creates problems, but let's just go in here and create a new slide, and I will try to draw this for you as we speak. Why not? Let's see how bad I can do here. So 1 second. There we go. So my point with this is, it's the ability for the markets to be manipulated without any outside influence is very easy. So if I take this tube, and we'll put this one right here, and I'm going to call this one stocks. And you can pick any one. It could be Apple, Microsoft, Intel, it doesn't matter. FCOCKS. All right, there is your first piece. And it's easy to push this left or right, because they don't have anything really impacting it, right? The more that impacts this, the harder it's going to be to move it one way or the other. So I'll put these two little arrows on here so you can see as a reference that it's very easy to push this sideways, okay? Now the difference is that stock market is being impacted by a much bigger force. Let me shift control here, and that is, let's change this color. We'll make that, whatever, we'll make it this color. We'll send it to back. And that is futures. Sorry, it's not going to show me the wording properly just because it's so small. I'll shrink this down and change that a bit. 1 sec. Okay, so I know I'm trying to do this live. It's a difficult thing, but you've got the futures markets are now acting as an influencer. And that's speculators are saying, where do we think prices are going to be in the future? So while you may think that stocks are on this island by themselves, they're clearly not. And then you add on another layer on top of that, make it even a bigger one. And I gotta be careful here because I need to be able to write on these things. We'll send this one to the back. And the point I'm making here with the stocks is, now that I have this futures one right there, okay? Now that I have this picture for you guys, 1 second, let me get that one off screen. Would you say it's easier or harder to manipulate the stock market? Do you think it's easier or harder for this to be pushed, the stock market to be pushed left or right? Hello, Obiama. Good to see you. it's going to be harder because if you try to manipulate the stock market, the speculators about where the market's going to be in 3 months, 6 months, 9 months, they're going to have their say, and it's not going to move with the same sort of ease as it would have before. Now when I add in this next variable, and let's make this a different color, we'll call this, let's see, what color do I want to make that? I will make this shape fill, we'll make it yellow, right? And I'm going to add in a little text box there, and we will call that bonds. And this is where we are right now, is the bond market is kind of dictating what the futures traders are thinking about the markets, and that's influencing the stocks. But it gets even bigger than this. There's actually one more to this, which you will see here right now, and that bolsters my argument that we've been discussing here, which is what's really driving all this. Let's send this to the back, change that color just so you guys can see something different. I apologize for doing this all live, but that's green, and we will call that Forex. FX. Okay, so now we have the complete picture. If you're trading the stock market, and thank you, Big Eb, for saying that. I'm definitely not trying to pick on anybody. Just trying to show clearly, how this all represents. Big Eb says, "Oh, not the best dream for my long equities." Well, if you were long equities, then what we have to be doing is looking out at the futures, looking at the bonds, and looking at the FX to see if that in fact is going to impact stocks favorably. So if we do see signs that, the Forex markets and bond markets are going to have a positive impact on the equity markets, then you're going to have a much higher probability of success on your equities trade. In this moment right now, let's look at these 4 variables. I'm going to start with the stock market. We'll go one by one here. So if we look at the equity market, granted that's going to be the S&P, right? First off, I would question right now whether you want to be long or not. Now, I would say right now, as of today, you probably want to be long. Why? Because the S&P, you notice, tiptoed down into this yellow demand zone that we've had mapped out here for weeks now. It's closed that gap. This is a very, very logical point for our markets to bounce, right? So if you're just trading the equity markets, okay, I think you're probably good going long at this moment. However, we can look at the futures markets, and actually this is the futures market, so I'm going to take it out further, and let's go look at the bond market. Those bond market yields are surging. Remember, the higher that this goes, the worse it is for the equity markets. You'd rather see this dropping if you were bullish on the equity markets. So right away, I already have conflicting signs here. I might be able to get a short-term play, a short-term bounce off the S&P because it's in a demand zone. But the bigger picture tells me what? Bigger picture should be telling you that there's a better probability that the markets are going to go lower because the 10-year is so strong, right? This is ultimately going to impact this graphic here. And bonds are going to be pushing down on those equity markets. And Tom says, would contend that the bond market is primarily the part cash from China, Japan. You also put a circle for all the real estate, real property. Yeah, I mean, granted, Tom, I'm doing this live. It's real quick, just to give you a general idea. We could definitely turn this into a PhD graphic and go to the impacts of everything. Like, where's options on here, right? Where's the derivative market? So you're right. There are different ways I could make this more efficient. But I'm doing it live, on the spot. So, yeah. I'm going to leave it as is. Let me bold this one and change this font to a white font so it makes it a little bit clearer. There we go. So, is it all just China? No. I would argue it's central banks around the world. It's not just China. It's not just Japan. It's definitely going to be Europe. It's going to be BRICS countries. It's going to be anybody who's doing business with the United States, and actually anybody who is issuing debt at a lower rate, right? Anybody who's issuing debt at a lower rate than we are has free arbitrage. Does everybody understand that they have free arbitrage? I can go and show you. I showed you this the other day, but let me go to markets, and I'll scroll down here just so you guys can see it. Hold on a second. Bear with me as I do it. So these are your central bank rate. Ooh, come on. These are your central bank rates, and I had it up here just a second ago. Where is it? On the left-hand side, you guys can see the central bank rates. U.S. is at 550. Australia is at 410. Swiss franc is at 175. So the Swiss franc can issue bonds. Let's just assume that they're issuing bonds at that rate. Well, if I'm the Swiss economy, I'm right now salivating going, sell every single thing I can. Sell every bond at 1.75 that I could possibly sell, because I'll just immediately flip right back over and buy the U.S. markets at 5.5%. And I'm making 3.75% for free, right? That's really the gist of why we're seeing so much money pour in. Now, as these other central bank rates increase, it might deter a little bit from the amount of money that's pouring into the United States. And at some point, I contend it will probably be late next year. At some point, we will probably start to see rates taper back down. But again, we want to make sure that we get to that 2% inflation mark. I say we, but it's Jerome Powell and the Fed's decision to get to that point. So there is the long-winded answer to your question from Alex on this one. You know, what's driving the U.S. dollar? Big Eb mentioned it here a minute ago, which is probably the most appropriate answer, the simplest, which is it's the flight to safety pushing the U.S. dollar. Correct. It is that. It's people going, our government might have a little bit of issues. My economy in Japan or China might be a little bit iffy. I'm going to go and buy the U.S. markets because they seem to be the most stable right now. I'll buy U.S. equities. Okay, that's one aspect of it. Then there's possibly even buying the bonds because you get the better yield on your money. So bottom line is, if you're looking to make money in any other part of the world, the U.S. is probably the most desirable location to do so. So you're going to convert your currency to dollars. That in turn causes demand for U.S. dollars, and we see that dollar surge up even more. And I don't really see it slowing down anytime soon. You know, if I drift this back to a weekly time frame, there we go. You know, we have had a pretty big pullback here, and you would think that it may have fallen even more. But you know, when you look at things like the unwinding of the balance sheet. So right now the Fed has trillions of dollars on their balance sheet that they need to unwind. They've bought all this stuff to prop up our markets. Oh yes, this is not a free economy. This is not a free market. This is a manipulated market by central bankers. They've been buying all of these bond products to stabilize the markets. They've been buying mortgage-backed securities, which they really should not have done since 2011. But they've been continually buying mortgage-backed securities for, you know, another 5 years past, or actually 11, 12 years past when they should have stopped. And that propped up our housing market. That created a housing boom. And now we have the bubble on top of a bubble on top of a bubble. So, you know, it's this manipulation piece that's driving things up. And if the Fed is unwinding their balance sheet, that means that they are selling bonds that they've purchased in the past to prop things up and keep yields low. They're selling those, which means more bonds going to the market, which means yields go higher. When they do that, they take that money that they created out of thin air and they return it to where it came from. Essentially, they are removing US dollars from the supply available. So not only is demand surging because of we're the safest place, we're the safe haven. Also, we've got the best yields for people to buy. Now we have demand surging because of those two, but supply of dollars is actually dropping, which is now why we have a chart that looks like this. And until one of those variables changes, either we start to lower rates, our economy goes into a slide, or the Fed starts buying assets again, I believe this picture is going to stay the same. I think you're going to see that trend continuing up. I know it sounds crazy to say this, but I actually do think you could see that dollar index challenging that 114 next year. Not this year, but getting back next year, I think that's a very real possibility. It could very, very easily happen. Sometimes I scratch my head and say we are a bunch of short-term contracts more valuable than market cap of all stocks. Hold on, I don't quite understand that one. I scratch my head and say, are a bunch of short-term contracts more valuable than the market cap of all stocks? I guess there's no real easy answer to that one. I guess it depends on which short-term contracts you're talking about. What are you talking about? The futures market? Well, the futures market's that expectation and is typically a driver of price. The speculators out there, the drivers and people thinking about where it's going to be in the future, they may be putting pressure on these markets. They may be doing things to lobbyists for bills and regulations and all sorts of government issues to help those markets achieve their goals. Remember, there's forces that are way more powerful than you and I have access to. Yeah, that's what I thought you meant. Short-term contract meaning futures. Futures by no means guarantee where markets are going to be in the near future. However, they are an estimate by institutions, and they're speculating that the prices will be either higher or lower at some destination point in the future. So the other part here that Margaret brings out is oil. Look at that one today. Talk about a nice rip. We had a 3.64% pop today in crude oil. That is a pretty big jump. Sorry, not today you had that, but look at the weekly, right? I still have this target up here of $100. We might be there sooner than I thought. I mean, that is a monster break to the upside today. Broke above the highs we achieved last week on the 19th, on Tuesday. We are now at 93.68. Now, when I asked you guys, do you think it's going to be at 100 by the end of the year? I think we had a 60% of you said yes, if I'm not mistaken. I could probably go back and look at the poll. At that time, when we did this, which was on the 25th, that was on Monday. It's really only Monday I asked you that one? I could have really, I thought it was actually longer than that to go. I'm losing track of time. At that point, it was an 11% move to get there. Now, based off current levels, it is 6.79% away from hitting that level. Pretty crazy to think that we've jumped that much that quickly. Based off of that, you could see crude oil above 100 by the end of October. Crazy. Oil rally into recession. Well, it's certainly not helping. It's definitely not helping it. The higher this goes, and I made the point, I don't see why it would stop unless the U.S. government gets in and starts saying, working with Saudi Arabia, Russia, and the OPEC members. Otherwise, if I'm OPEC, I don't care. The higher price, the better. Keep going. Maybe we ought to drill. I'm all right. It's funny. I'm okay with drilling. I think I'm drilling as long as you do, some environmental tests. A lot of these drilling can have serious adverse effects. And one of the things I hate about the beaches out here in California, one of my favorite places to go is called Dog Beach. And it's a leash-off dog beach. It's absolutely the greatest place on earth. Forget Disneyland. Disneyland, you got crying, screaming kids, and you got to wait 3 hours to ride a ride with a toad or a abominable snowman for 2.7 minutes, and all of a sudden you got to get back in another 3-hour line and spend $50 for a can of soda. That is not the happiest place on earth. It's fun if you go there when there's nobody there. The happiest place on earth is going to Dog Beach in Huntington, go all the way down Golden West till it meets PCH, go right across it, you'll hit it. Leash off beach where dogs are running, playing. Very rarely do you see aggressive dogs because they're all so happy and excited. It's a utopia. However, when you sit there and you look across and you see Catalina off in the distance, you also see these oil rigs. And every now and again, I go back to my car and I realize I've got oil stuck on the bottom of my feet. I picked it up somewhere. It's like, no. I always point the finger at those oil rigs and say, you're polluting the ocean. I don't know. Maybe I'm just being an old curmudgeon. Didn't JP Morgan put out 150 by the end of the year? I didn't see that one, Michael, but that'd be pretty aggressive. I mean, let's look at the picture here and just see what does 150 look like. I mean, I have to do a lot of adjustments here to even to get to 150. So the numbers we're looking at from current level, 6.79% higher. Do I think it gets to 150 by the end of the year? I think that's a pretty audacious target. That means that right here's the end of the year. That's about a 60% increase in the price of crude oil from current levels. I thought I might be a little ambitious with my 11%. Well, here we are, only with 7% left. Considering it moved 3.29% today, we could potentially be at $100 by the end of the week if it keeps doing this. Marcus, look at the monthly for oil. Absolutely. Let's take a look at that monthly. Let me bounce that off. Okay, so monthly for oil, the picture changes a bit, in my opinion. We do look back going into 2002 on the hard left side of this chart, and it's obviously had some huge volatility, some big price fluctuations, and I think one of the pieces, and you guys can correct me if I'm wrong. Let me know what you think here. Let's not be hostile or aggressive about it. I don't want aggression, but it's just opinions. Don't be like, you're an idiot, Merlin, which I could be. I hear so much about, the EV market, the electric vehicles, is going to absolutely crush fossil fuels and we're never going to use oil again. While that might be the case in 80, 100 years, I don't think that there's any way that at least in the next decade, next 20 years even, that we're going to look at fossil fuels and go, no one's using that stuff. It's just sitting there idle. They're going to use oil for petroleum products, for plastics. May not be as heavy for vehicles, but I think we're still going to be using oil in some capacities. So to say that oil is going to go to zero, I think is kind of I think it's kind of an absurd comment. It will be around, it's just going to be used in different capacities. So, I'll ask you about that in just a second, Talking Monkey. I'll ask you in just a second on that one. That's weird, the commercial thing. I got a question on that, so let me explain that in a minute. The reason I bring that up is, if we look at what happened with crude oil, this is the futures. This little blip right here, I think, is completely an anomaly. I don't think that this will ever happen again. I never thought that this could happen at all. That's when we went negative to negative $40. Absolutely insane. I think that because you are consuming so much oil out of the ground, there's a relationship that people aren't talking about, which is, yes, demand may slow down for vehicles because so many people are using Teslas and using electric vehicles, but the amount of oil out there, the ability to pump out 25 million barrels a day for Saudi Arabia or whatever their number is, that's going to diminish going forward because the pools that they're dipping into are shrinking. So while demand may decrease, I think supply is going to decrease as well. And if I'm OPEC, again, I'm just going to decrease production. I think 150 by the end of the year is a little bit too much. I think 100 would be easy to do. Let me ask you this. So I just received, when I started the stream today, I was faced with a whole new set of questions from YouTube. And obviously, I'd rather not have you guys have commercials or be tortured by that. But again, this is free. I've been doing it every day. I figure you guys can suffer through a commercial or two, which actually gives me a couple bucks at the end of the month to help pay for some of this stuff. So I put it on the mild setting. There's actually an aggressive. There's 3 different choices. There's mild, normal, and aggressive with regards to advertisement on the shows. But they just changed their policy, so I have it on mild, and hopefully it's not too bad for you. I apologize for that. I wonder what they're advertising. What are they trying to sell on my show? Is it, if it ends up being Sam Seiden's school, I'll lobby a complaint. It would be pretty funny if he was advertising on my show. Gary K says, feels like oil will rally into 24 recession. 10-year yield hits $5. Something breaks. The oil poops the bed. Yeah, I think you're talking 10-year yields over 5%. I just commercial I was speaking. That's so weird. Hopefully it continues right after I'm done. And now I think the weird part is if you're all receiving commercials at different moments in time, you're all at different points right now. You're not all actually on the same talk track, which I think is going to be a weird thing going forward. If I get some sponsors, I will maybe I'll try to remove all ads altogether. All right, Keto, that's a tough one. Keto Fito. Oil and gas, even kerosene, will be used for decades to come. Obvious considerations: the condensed power and ability for on demand. But transitioning away from end all and be all is the goal. I think that's what they say, but I don't believe that we are going to see that happen. I don't think we're going to move away from it altogether. It'll still be there. Oh, cool. Good for you. Guys, use the ad blocker. I think I still get credit if they try to pop up an ad to Lori and she doesn't watch it. It was Matt Damon FTX. Get out of here, Shmav. Yeah, Lori, which one do you use? You can share with the audience. What's your ad blocker? I'm going to probably get censored now because I'm telling people how to use the ad blocker to get rid of the YouTube commercials. Great. I'm going to ruin my show. Hope you're getting paid for some of these commercials. They keep interrupting your shows. Yeah, I am. It's not much. I'll mind you, like at the end of the month, it's like $150 in ad revenue I make off of it. So it's really not that much, but I do have overhead costs such as just the podcast, website, and things like that I need to pay every month, and I figure I may as well have you guys pay for it. Sorry. Let's see, let the old digital marketer encourage everyone to consider clicking on the ads. Don't just click on them, but consider clicking on them. Ooh, there we go. Just like a tip for the oil Merlin. Exactly. Which oil company should we look at? Outside my area of expertise. We can look at the price charts, but I wouldn't be able to tell you the fundamentals about each of these oil companies and kind of what their strengths and merits are. Not my area of expertise, but obviously one thing that I would be doing if I was interested in this is I would probably just go with something like XLE. Now XLE is not specifically oil, but it's energy, and you have the whole ETF there, which from a chart perspective, XLE looks actually pretty good. This is actually a bullish formation. I'll continue this little trend line up here. You have, for my mind, let me get rid of some of these other lines. I hate when I have lines I don't remember why they were there. It looks like you have an ascending triangle going on right there with the lines I have on your screen as of this moment. So while it looks great, it does look like it's due for a pullback down to this uptrending line here, and that's all of the energy space represents. Do you want me to use OIH? I can use OIH. But I like the liquidity I get with XLE. If you go to volume here, OIH is, 400,000. That's really light volume. So I'm not going to be able to trade this with size. Whereas if I look at XLE, you're talking very robust. You're 23 million shares traded today. 23 million shares traded again. But at least I can look at the specific OIH. And by the way, you can always go back through and go to something like bar chart, type in OIH, and look at the components so you know exactly what you're buying. All in all, OIH looks great, right? I mean, it's not an unbelievably aggressive move. It's just consistent, higher highs, higher highs, higher highs, looking good. Off the lows that we saw, it's kind of misleading because what we had back here, that in 2020, in March, we went below zero. That was something that I don't think will ever happen again. But it's a 433% up move in that period of time. If you are bullish, as I am on oil long term, then something like OIH may work for you. Now let me go real quick and check on bar chart just so you can see what all those components are, because I like the safety of an ETF. So I know Michael, you like individual securities, and I have no problem with that. But given all the things that I'm trying to do on a day-to-day basis, I don't have the time to research them all. So I typically will go for an ETF. And here you have, it's like OIH. All right, so you go to Van Eck Oil Services, just to give you an idea of what they're invested in. And scroll down to the left-hand side, you see constituents. And now you can see Schlumberger, Halliburton, Baker Hughes. So these are all, these are drilling and machineries and equipment pieces for, it's not ExxonMobil or Chevron and ConocoPhillips and things like that. All right. EGY you want? Yeah, you're going individual. So I typically don't do that. It's just too risky for me and my time allotment. But if you do EGY, my charts are back. Look at the chart. Chart doesn't look that great. I don't care about the fundamentals. I don't care what they do, how they do it. The chart just does not look great. It's traversing sideways, hasn't really done that much. It's stuck at 450. Could it go to 5? Yeah, which would be, 10% increase. Great. But all in all, the chart doesn't look that great. CPE, a lot better. The reason I think CPE looks way better is just you have this series of higher highs and higher lows. And it's actually a real price. It's $30, $40. That's better than a lot of stuff you show me, Michael. You love stuff that's in the $5 range. But at least this one's got a trend going to it. Looks good. Again, I wouldn't buy it because I don't know anything about the company. I would go with an ETF that is a better representation. Crude ETF is a good one. All right, let me check that out. I haven't looked at that one. Let's go CRUD. My guess is this is going to be a derivative using futures. So I think I just put it in there and it didn't do it. CRUD. Crud. Huh. It's not bringing this one up for me. Not bringing that one up. So all of a sudden, OK shows up my account today. You mean shares got switched? That will happen. That will happen. Let me see. I had two other questions I want to get to. Les, you asked this one, so let me just kind of go through this one real quick. I want to make sure I wrap up. I got, again, many things I'm trying to get done. Les says, do you have any thoughts about government shutdown and how it might affect the markets and our trades? In the many shutdowns I've been a part of, the many that I've seen over the years, it seems like initially, within a couple of days of the shutdown, the markets sell off a little bit, and then they seem to just recoup and rally back up. It never seems to be that catastrophic, oh man, it just destroyed the markets, yet there's this perception that it does. So I don't really have any thoughts about it anymore. I really just don't even care. I know it's going to happen. It may happen. If it does, probably going to see a little bit more volatility, but I just don't put a lot of stock in it. No pun intended. So sorry, Les. It was something I used to really pay attention to a lot, and after the last couple shutdowns, you're like, meh. It seems like it dipped a little bit and then it just starts to move back up. Maybe as we get closer to that potential shutdown, maybe on Friday, I'll go through and I'll show you the most recent ones. It's going to take some time for me to pull all that together, and I got a lot of stuff on my plate right now, so we'll see if I can maybe get to that one for you. Marcus, I don't know if Marcus is here. Cheers, you're new to the show. He says, new to your show and trying to learn as much as possible. How long did it take you to get it? My head is spinning. A long time, Marcus. I was very I was very fortunate in my background because I learned the traditional investment philosophies through university, which was garbage and a waste of time. Then I went and worked for a financial planning company, so I really learned what the dark side is doing with your money and how they are using that money to make themselves more money. And then I learned how to do it all on my own. So I've kind of see all spectrums of the investment and financial world, and I knew the basics. I knew all the terms. I knew how the basic market structures function. I would say start there. Just understand the basics of what is a market, right? What does a market like the NASDAQ or New York Stock Exchange or Euronext, what's the service that they provide to you and how do they do that? Once you understand that, then you can start to look at companies and buying shares of those companies, what it means to you, learn the terminology, say start slow. I've had a complaint from some of my friends who watch this show that it's way over their head. They're totally confused. You're probably right. Initially, I wanted this to be a much more low-level show, but the viewers, the guests here that are watching every day, kind of have driven it to a little bit higher level. So I try to keep basics in here. I try to go through explanations of how market works, functions, very elementary, but also going a bit more in depth and more advanced, which is probably confusing you. I would say that the best thing you can do, Marcus, and anybody else who might be struggling with some of the concepts and terminology used here, or just the way that I present, because I'm a fast talker, would be to send in questions. Just ask me questions on things that are bugging you. And as you guys have seen, I am very eager and open to take someone's question on what's driving the US dollar or what's going on with Apple. Bring those questions, send them to me, but you got to give me a little bit of time. A lot of time, I love the stuff that goes on live in chat, but I think you guys can appreciate I'm not Jim Cramer. Jim Cramer knows everything about everything on the planet. I'm being sarcastic. His show is pre-recorded and scripted, so when it sounds live, it's all pre-recorded. There's no live calls going on in his show. There's no live calls going on Dave Ramsey as well. This is actually live, and it's hard to kind of answer everything perfectly on a live show. So if you send things in that you want answered, you can send them to Merlin at Trading Academy or TraderMerlin at gmail.com. Slip there. So TraderMerlin@gmail.com or put them down below any of the YouTube videos. And Marcus and others, I'm always happy to explain things basic. We've got some traders in here in this room who've been trading a long time, and they may roll their eyes for a minute, but they'll understand that they were in your shoes at some point as well, and may even start to go through the chat and try to help you get past some of those obstacles, because just about everybody here has had to learn through the UHK, University of Hard Knocks, what their own problems are, their deficiencies in trading, their flaws, and figure out how to fix those ones. So GS3 says, I'm always learning something new with your videos. It takes time. Yeah. Thanks, Pepe. I suppose the perfect way, the way it is, so everyone can understand. Yeah, well, some people don't. Some people don't understand it. Art Truly says, Merle, what platform do you use to trade? It really depends what we are talking about. So if we're talking futures, I like Trade Pro Futures. And my futures trading is very limited now. I use a lot of the retail brokerage firms, so I've got an account just about everybody. I've got a Schwab account, I have an Ameritrade account, I have an E-Trade account, which gets you access to things like Thinkorswim. Spot Forex, I was using Oanda, but I really don't do much Spot Forex. If I'm going to make currency trades now, it'll be with futures markets, and TP Futures gives you the best margin rates I've seen, plus the support there, and I know Trey well, so I know Trey well, and he's just a very good person. So those are typically the platforms. Most of my analysis is going to be done using free platforms like TradingView. I actually really do like TradingView. So as far as stocks go, just the retail platforms. I don't need to have direct access anymore. I used to use TradeStation, but TradeStation just kind of annoyed me with some of the things they were doing with regards to charging me 10 times data feeds for being a professional trader, which I argue I'm not a professional trader. And I don't want to put that tag on me. I'm a trader. It's what I do. But I think that once you label yourself as a professional, I don't know. I think there's an arrogance that goes along with it that I just don't want to have that. So, but yeah, I trade stocks on my Schwab platform, my E-Trade, my Ameritrade. I had a Tasty Works account because I wanted to connect that to Click, but don't really use that one. And my TradeStation account, I pulled my money out of there because they were charging me too much for data feeds. What does debt selling why does debt selling keep being raised? Because none of these politicians, this is not a Democrat thing or a Republican thing. Again, we're walking that fine line. None of them want to be the one to say right now, we're not going to spend another dollar. While they may be pounding the table saying, we don't want to spend anymore, we don't want to spend anymore. If that's true, then they have to make cuts somewhere else. And where they start to make cuts is where they now get in trouble with their constituents. Their voters will be like, hey, wait a minute, you're cutting this and this and this. Well, I can't raise the debt ceiling anymore. So it's all talk, it's all posturing, it's all show, but none of them really want to go out there and make drastic cuts to government. If they did, people would be out of work, and those people that lost their jobs would point the finger and say, XYZ politician did this and we lost because of that person, then they'll get voted out of office. So it's really kind of a damned if you do, damned if you don't kind of situation for politicians, but they yell and shout and scream at each other and don't really do anything. I like OTA trade. I don't have a subscription to it now. I've been on some of the workshops and some of the development meetings. I think it's pretty cool, particularly what you can do out there with with options. I think there's some really great functionality being built into it as well. So I'm excited that their development team is working very closely with the instructors at OTA to make this kind of a custom thing. So yeah, I will probably be using that. As long as the fees are fine and the data does what I want it to do, I will be using that one. Let's see, $10 activity fee from TradeStation on each account. Yeah, it's the same thing on. I used to have it. Interactive Brokers also has inactivity fees. What else we got? TraderMerlin has tons of free videos and markets and trading help to get you going. Yeah, and markets, there's a lot of stuff out there that's for free. Traders Army has a bunch. Online Trading Academy has a bunch as well. But, I would say just don't rush into anything. Just start slow, learn a little bit, get a little bit of money, and start trading with real money. I think that's the key, is you want to start trading with real money, but keep it very controlled. Don't take a lot of risks. Don't buy high flyers and be manipulated by people. Plan out your trade, entry, stop loss, price target, follow all of your rules, and learn about yourself, which you will be doing. Marcus, it's a challenge. Trading is a very difficult thing, especially because it's what's going on in your head. Let's see. Trulio says, how about starting buying and trading Bitcoin? I did this session today with my digital asset students for OTA. That way, I would say just start with somebody like a Coinbase. Coinbase is probably the easiest. It would either do one of three. It's Coinbase, Kraken, or Gemini in the US, just because they have ACH and all the selection you want. They're fine. And as you start trading more, you'll understand that there are better ways, but don't learn the better ways first. You got to start learning how to drive a basic car first. For example, if I said, is a Lamborghini Murcielago better than a Honda Accord 4-cylinder stick shift? Yeah. Hell yeah, it's better. But there's no way I'm going to put you in that Lamborghini to start driving. Start with the Honda Accord, stall it out, learn about driving first, and then move on to the better tools and resources. Charles Schwab for investing in Kraken for crypto. Yeah, Kraken's good. I don't like the fact that they don't have staking right now. Now that may be coming back, right? Staking may be coming back to Kraken, but right now it's not there. Where is Brandon Wendell? Don't know. Brandon's always doing a million different things. He was working for 3 or 4 different firms, so I'm not sure where he's at now. Who knows? He's always selling something, got some school he's working for. I haven't talked to him in a while. Okay, I think that was it for my questions. So I had Marcus's. Oh, I wanted to show you this one real quick, just to give you an idea. As you guys know, I'm a firm believer that when everyone says, hey, look to the left, you need to look to the right. When everyone says the sky is falling, you should look to the ground and make sure the ground's not moving. When everyone says that you've got to buy into Bitcoin, you should think about selling it. Well, here's the fear gauge for our markets. Overall, for the S&P 500, it's bordering on extreme fear, which again bolsters the argument that we will probably see a bounce tomorrow. S&P is into a demand zone. You got everybody freaking out. It's kind of ripe opportunity for this to be a bounce because everybody's panicking. Great. Someone earlier mentioned the VIX, so I'll bring up the chart of the VIX here, which is a volatility measurement, and there is your VIX. Now, it looks like it's had a big surge, but if you understand the historical numbers of VIX, it's the VIX should be, we're extremely low on this VIX. The old numbers used to be 20. So if it was below 20, right, VIX is low, time to go. That means you should be out already. VIX is high, time to buy. Well, high number was 40, which I have mapped out there. That used to be the range. Right now, we've been below 20. We haven't popped above it since May of this year. So even though it's surged a bunch, I don't think there's a lot of fear in the marketplace yet. Where was that gauge from? I pulled it up from Twitter. I don't know the exact website, Pepe. I should have quoted that one, but I see it all the time, and I saw it today. I was like, damn, that's pretty extreme. Is Brandon W. not with OTA? No, he is not associated with OTA at all anymore. Brandon gives an update on Twitter almost every morning. Yes, Twitter. It's okay. I don't mind Twitter. Yeah, he's out there. He does every day a little, he does a couple charts, and here's what he thinks. And, bravo to him. I will give him credit for that. He's out there every day saying, I think this is going to happen, and here's why, etc. Is he going to be wrong? Absolutely. Is he going to be right? Absolutely. He's going to have some days he's right, some days he's wrong. What I can't stand are these people that just attack him for one day he'll be wrong and be like, oh, you're a loser because you were wrong. One bad call does not make you a bad trader. Now, if you went through and all of a sudden 90% of his picks go the wrong way, all right, maybe that's a bad idea. But I think it's a good resource for people to kind of understand how to read the market, what somebody's thinking about it. I was going to do stuff like that. I just don't have the time. So maybe someday I will have a social media expert or someone to help me out and do all my social media for me. Because you leave me on social media, all I'm going to do is go on there and start attacking Sam Seiden. That's pretty much all I'll do. Or mark myself safe from dating Taylor Swift. I couldn't resist. I'm so tired of hearing about Taylor Swift and Travis Kelce of the Kansas City Chiefs. Like, come on. I'm over it. Who cares? Good for you guys. Great. Go have babies. Leave us alone. All right. Let me go and just give your economic calendar for mañana. And then we will wrap this show up. I keep trying to make this a 30-minute show, but I just can't do it. It's driving me nuts. Here's what you got cooking for Thursday. U.S., you got the final GDP numbers. They're expecting it to tick up to 2.2. You would want to see, if you are bullish on the U.S. economy, you want to see this final GDP number surge. You want to see it way higher than 2.2 tomorrow. Unfortunately, I think we'll come out probably in line with expectations. You have Fed Chairman Powell will be speaking tomorrow, and I think he's going to speak at a town hall event in Washington, D.C. tomorrow. That's going to be at 1 p.m. Pacific time. So markets will be closed. That makes it easy for you, but could still be dangerous. He could have market moves based off what he says. You can see you also have member Cook will be speaking. Goolsbee is going to be speaking tomorrow. But the main things are going to be GDP, unemployment claims. You also have the GDP price index. And lastly, one that I am going to be glued to, pending home sales. Check out the chart of pending home sales. It's been very negative for the past year and a half. Most of the lines are below zero, which means contraction. Now, right now, it's at 0.9. They're expecting it to come out negative yet again at negative 1.1%. The more that this stoops down below zero, the worse it's going to be for our markets. So just keep an eye on that. You are just too good for only 30 minutes. No, you know what it is? I really do this show. Somebody asked me, like, why do you do this show? I said, well, I love having a venue where I can talk about markets. Because if I go out tonight and I go out and have dinner with someone or go meet people and whatever, I don't really want to talk about markets. I don't want to talk about what I do. I don't want to talk about my background. I don't. It's like I leave it here is where my trading stuff stops. When will markets be closed? Real estate skyrocketed this week. Did it? Based off the new home sales, which were bad. I don't know if real estate. Let's look at IYR. Yeah, I wouldn't call this as real estate ETF. I would not call this skyrocketing. Maybe you're being sarcastic with me now. Maybe that's what that was. It's been a pretty brutal one for IYR. It's actually getting to the point I was thinking maybe I might look at selling some puts on IYR, but I just think real estate's in for more pain. In the past 5 trading sessions, real estate, the IYR ETF, is down 8.32%. And let me zoom out here just a hair. You have this giant pennant formation, which usually breaks in the direction of the previous trend, which was down. Now all of a sudden you're back down to these lows on IYR, which go back into October 12th of 2022. And that low price was 77.24. And we are actually was it 24? Sorry, low is 75.66, and we're almost there now. So, yeah. Okay. This show's like hanging with a friend. Yeah, it would be nice if everyone could have interaction, and maybe someday we'll get to that level where it's video and we can all share and discuss. Who knows? There's people have been talking to me about that I should do subscription based and go into a subscription model just to make it worth my time. I can't tell you the number of people who have said I'm a fool for doing this every day, this often live for free. I'm like, yeah, well, I'm a fool, I guess. Anyway, prices. Even the Case-Shiller numbers didn't look good. If you go here, let me go back to that one because we did have the Case-Shiller. One sec, I'll bring that one up. So here's your Case-Shiller Composite 20 Home Price Index numbers. I wouldn't say they were shooting up, right? But this is what we were looking at the other day, where you have the prices of homes in 20 major metropolitan areas have been in a free fall, really going back into June of 2022, just declining, just no growth, right? It's not growing at the rate it was. Then we actually had contraction for 4 months. May, June, July, August was contraction, and the most recent number came out and it was positive. And I think that that's what you're referencing. That it was just slightly to the upside there. Yeah, it was definitely an increase over the previous month. So prices did move up, but I would say they didn't move up. They just stopped declining. You'd pay for a subscription? Well, maybe I can do it at some point. Can you make a show on corruption that you see in the financial system? An honest view of what's corrupt and what isn't? Oh, man. I could get myself into trouble on that one. I've said it before and I will say it again. One of the things that I think that is important, and you should share this with people that are following specific people in the industry. You know, businesses, if you look at what businesses are sales organizations, they're going to do what they can to get sales. And sometimes the mistakes are made in the way that sales are done. However, if you look at people themselves, particularly those that are making claims and coming across as prophets, those are the ones that you got to watch out for. And there are a lot of them. So if you're some guy's in your direct mailbox and he's sending you messages saying, hey, I'm so great and you should take my classes and here, spend $6,000 for this, that, and the other thing, you should type in their name and do a search. And most likely what they do is these guys will pay a reputation management firm to push all the bad search results down and away from their name. So you type in words like scam, fraud, and lawsuits just to see if there have been any lawsuits. And you'll be surprised at the information that you find out there. And again, the people who are good at this, I say good at being deceptive. The people who are good at being deceptive will pay entities a lot of money to try to hide those results, those search results, and push all the good stuff to the top. And they will do a lot of tweets. They'll do a lot of press releases. They'll do a lot of things so that those elements become the top searchable pieces, right? They move up to the top of the search ranking and push up there. So it's kind of like saying, oh, I did my homework and I looked for, Merlin Rothfeld. Well, you can feel free to type in Merlin Rothfeld scams. I've never been accused of a scam. I have never been subpoenaed. I have never had a federal regulator name me in a lawsuit and look at my trading records, right? None of that. It's not part of who I am. I'm not making claims about being a great trader. I'm not doing any of those things. I'm just trading to the best of my ability. I'm right sometimes. I'm wrong sometimes. And at the end of all of this, hopefully my career will be a very successful one. But I'm not making any claims or trying to sell you guys on a service. And a lot of people are. So do your research there. Now, Blue Diesel, to go back, that was just a small piece. That's on individuals. I think what you want is on corporations and bigger firms. That gets sketchy, especially depending on how you present that topic. So let me think about that one. I think that might be an interesting topic. Just know outright before we did anything in that discussion that this industry is corrupt. I don't care which company you look at. You name any one of the top 50 financial firms that you can think of, right? I encourage all of you, think of any bank, any financial firm, any investment firm, type their name into Google and just type in SEC settlements or lawsuits, and you will see every one of them, without fail, is guilty. Actually, they don't admit guilt. They pay a settlement, they pay a fine to walk away from it all. But the industry is corrupt. And it makes sense because anytime you have an industry where one group controls the information and the other group is trying to make money off that information, it's clear who's going to win there. the people that have the information and access to the orders of all the people trying to make money off that information. So you'll see it time and time and time again. There is no argument. The industry is corrupt. It is a very deceptive. I say that the only business that is more deceptive, corrupt, lying, cheating, backstabbing industry in the world is government. Business in the financial world is a very close second, and in many cases, they overlap and become one and the same. So let me think about that one. I might dive a little bit deeper into it and maybe show you how some of the corruption works and some of the deception, but I think you all have to go into it knowing that this is extremely corrupt, and you have to be very careful whether you're buying someone's subscription service and following their information, whether you're taking someone's classes. It's tough to know who to trust. I've got a few friends around me that I would trust absolutely 100%, and maybe at some point down the road we do something together, but at this point I'm saying a small fish. I want to be a small fish in the ocean as a trader and not have to worry about all the rules and regulations and that type of stuff, even though I follow them to a T. Okay, that's going to do it for today. I know you guys are trying to get me that 1 hour show. You almost did it. Good job. We got 58 minutes, but I'm going to end it right here. Again, if you have comments, questions, feedback, email me at TraderMerlin@gmail.com. You can do it that way, or put your comments down below any of the videos, just like we saw from quite a few of you today. We saw questions from Marcus, we saw Les, we saw Alex. Thank you guys for those. Send them on in, and that'll help steer what tomorrow's show is about. Until then, happy trading, everybody. I'll see you mañana. Take care.